Good afternoon, everybody. Perry Marshall here, and I'm here with Chad Meisinger and Joshua Long. And I this is kind of a special webinar, a little bit different than most of the other ones that we do. And today I'm going to introduce you to Chad. Chad is a faculty member in our program, which is called Advanced Mastery Network, which is essentially an incubator for taking small businesses and turning them into very big ones. And Chad has taken small businesses and he's turned them into big ones, and he's done it several times. And so I want to tell you about Chad, but really quickly after that, just get into Chad telling his story. Chad's biggest claim to fame is that he was a significant stakeholder and significant player in a company that was sold to Google 10 years ago for $1 billion. And it was a radio network. And he's got some really interesting war stories about that and working at Google and, meetings and decisions that made with Eric Schmidt and all of that. So that's interesting. But he's a serial entrepreneur. He's taken 3 companies public, and he's been involved in the founding and success of several large franchises, including Massage Envy, which is in I don't know how many hundreds of cities now, right, Chad? Um,
Yeah, 1,200.
that's a lot.
That's all, huh?
and um, and he's from Norfolk, Nebraska, which is down the road from Lincoln, Nebraska, which is where I'm from. So you even got 2 Nebraska guys, if you can believe it or not. So really blessed to have Chad um, helping teach and coach in our Advanced Mastery Network course. And we'll talk about Advanced Mastery Network a little more later. But Chad, welcome. Glad you're here.
Thank you. It's great to be here. My blessing.
So, Chad, I'd like you to start with the story of why your dad wouldn't give you allowance and what you ended up doing instead. Tell us, like, where are you from, and what's your family like, and all that.
All right. So I'm the son of a, a bipolar father who grew up in rural Nebraska on the farm and was drafted into the Vietnam War. He was blessed to have been stationed in Japan as a chaplain's assistant. And so I spent the first 3 years of my life in Japan. And we lived in Hawaii for a few years. And then when we moved to Nebraska, I was 7 years old. So that was the first time I saw snow. And I remember all my buddies at that age, at 7, were getting an allowance for scooping the sidewalks of their house. And of course, in the summertime, they were getting paid to mow their parents' lawn too. So I went to my dad and said, "Hey, Dad, I'm getting cheated here somehow. They're getting paid to do this stuff. I'd like an allowance." And he just laughed at me and took a copy of Boy's Life and flopped it down on the couch and said, "Son, that's your responsibility to the family. That's your contribution to being part of this household. If you want to make some money, then you need to find a way to earn some money for yourself." And so I used to scroll through those back pages and find everything that I could sell. Back then, you sold greeting cards door to door. You sold seeds for your garden and flowers for your flower bed door to door. And I even sold a newspaper called Grit, which I don't know how many of you are familiar with Grit, but it's almost like the National Enquirer, I guess. And it was sold door to door. And I remember at the age of 11 when I decided to stop selling them, and the vice president of operations called and said, "No, we'll give you 3 months free. Don't quit." And what a big deal that was to get a call from an adult long distance back in the 70s.
Well, I had paper routes too, and yeah, getting up at 5:30 on Sunday morning to go deliver
The
papers.
Omaha World Herald. I
That's
had a
right.
few of those.
So,
Yeah.
so
especially
All right.
riding your bicycle in the snow with the dog chasing you down the sidewalk.
Well, and I always wondered how the schools, when I was in school in the 80s, figured out to get all of us to sell all of those things you just rattled off for fundraisers for the schools. So they going door to door. I don't know how many years I sold beef jerky door to door, like Slim Jims before they were Slim Jims, and boxes of candy bars and magazine subscriptions,
Oh yeah.
all in the name of
Oh
fundraising
yeah.
for the school that didn't have enough money, right?
That's
So,
right.
so
Well, you
Chad,
know, we had a little bit of an advantage in the Midwest because if you were out there when it was 30 degrees outside, people were buying just out of sympathy.
Yeah.
Go
Right.
ahead, Barry. I'm sorry.
so by the time you were in high school, how had that shaped you to be different, than all the other little boys and girls in school?
Wow. Well, first of all, it was the beginning of that. The goal setting, what it did for my self-confidence to go door to door, to realize that money could be created, to not have entitlement around things. It was also the way my father fed my brain. I mean, he would force me to sit and listen to reel tapes of Zig Ziglar, Earl Nightingale, Norman Vincent Peale, Ogden Gino. I mean, these are put me in Dale Carnegie when I was a teenager. Stuff that was actually ahead of my comprehension, but it started to soak in into the soil and become part of the root system. And honestly, it took me probably until I was in my 20s and 30s to be able to look back. When you're in life and you're starting to see certain patterns and certain understandings that you have, and you're trying to kind of trace back the origination of it, because certain things become a fiber of you, and until you're introspective, you don't really know where they came from. It's just like they've been a part of you for so long. But it absolutely shaped me in a way where I became fearless. Risk was something I ran towards instead of away from. And just having the confidence to know that maybe you need to fail 30 times before you succeed, and not to let any of it get you down. Basically, you just keep moving forward, just to become kind of immune to it, I guess.
So when did you become an adult entrepreneur? What happened with that?
So getting out of the adult entrepreneur. Well, let's talk about kind of the things that shaped me. So if you look at the pattern of just about everything that I've done over the last 3 decades, they kind of involve businesses that can scale, that have a proven system and a process, that take the critical success factor out of individuals and place it in to the process and the system. And so franchising has been a very big part of just about everything that I've done. And even if it isn't a franchise, I create it like a franchise. I may not be selling it or licensing it that way, but identifying those critical success factors. And then I've grown up in this technology age. And so from the very beginning, I saw the value of automating as much as you could of things that would either accomplish the critical success factors or monitor that they were actually taking place, and giving you the ability to have scale so that while you're sleeping, things are getting done. And then sales and marketing. I'm all about customer acquisition. Everything that I look at, everything that I do, the first thing I look at is how do I get it in the hands of the consumer? What is that path? And is this a product or service that the customer already knows they're looking for? Do they already know that they have the problem? How are they thinking about it? And so I always want to solve those problems first before I get into it. Anyway, with that said, my first entrepreneurial venture was basically helping medical clinics, doctors' offices computerize. So Medicare and Medicaid had just put out a mandate that they had 24 months to digitize all of their medical billing. And they basically standardized the HCFA 1500 as the standard format that all medical billing was going to have to fall under. So prior to that point, there were 300-400 payees, and they all had their own format. And so there was this segment of doctors, however, that were looking at retirement and saying, I'm only going to do this for 5 to 10 more years. And I don't know if you remember, but you used to walk into a doctor's office, and as far as your eyes could see, from both directions, ceiling to floor, was all medical records and, you know, all the billing and all that stuff. You don't see that stuff anymore. It's all computerized. But back then, these doctors were fighting hard to not to have to do that before they retired. And so we created a business around doing that for them. So they give us boxes of paperwork, and we would digitize them and process those claims. And so I got really involved in the bulletin board industry at that time. And that was the precursor to the internet, which led me into my first franchise concept, where we franchised internet service providers. I mean, basically Al Gore got on television and was my biggest marketer, telling everyone they need to get on the internet. And back then, everyone was like, well, how do I get on? I mean, AOL wasn't connected to the internet. CompuServe and Prodigy weren't connected to the internet yet. There was no national ISP. You had some beginnings of entrepreneurs and nerds that were attached to a college finding a way to get a lease line into their garage and opening up, you know, dial up that was at that time, I think it wasn't even 28.8. I think it was even less than 14.4, maybe 9,600 baud or something. You know, it was pretty arduous actually once you got on there. We were just excited to be able to go to a command line and start to IRC chat back and forth to one another between computers. That was like wonderful, you know. But that was my first big launch, and I don't know where you want me to go with that, Perry. So I can keep talking about that story, about that first franchise. And actually, not only was it the first business that took venture capital, and so that was the big thing for me, because up to that point, I'd only bootstrapped businesses. You know, taking somebody else's money was a huge new area for me. But it was also my biggest business failure in life, and all the things I learned from that. So I'll let you tell me where you want me to go with that. I don't know what you have in mind.
Okay, so let's start with making the mental adjustment to taking on capital, because, I mean, bringing on and giving away equity, it's a very expensive way to get money, right? Later, when you have to pay. I guess you didn't have to pay because the thing failed. But I mean, okay, so all of a sudden you're not the only cook in the kitchen anymore. So how does that work?
Yeah, so look, just so you know, up to that point, I bootstrapped every business I had, you know, either credit cards or whatever you could save, or, you know, friends and family that might loan you a couple bucks to put a business together. And so this particular case with the bulletin board system. So we use this bulletin board system to process all of our medical claims. All right. So we basically became a clearinghouse so that people like us around the country could take all of the files that they had collected, send them to us. We would reformat them into the format for all the payees and send it out. Right. Well, at that time, there were all these different bulletin board systems out there that were kind of dying on the vine, because the internet was just starting to come together, and it was this transition that was taking place. You know, that's when you started to see Prodigy and CompuServe go away, and AOL was the winner for a time. And so I'm going to these conferences where the only bulletin board manufacturer was Wildcat BBS. They went public, and they raised $6, $7, $8 million, which they thought was all the money in the world at that time. And they were trying to find a way to bring on entrepreneurs onto their platform, because at that time there were only 3 things you did with a bulletin board. It was either gaming, it was downloading software files for your applications, you know, so you wouldn't have to have them mailed out to you. And then it was the sex industry, basically. They're the first ones to lead just about any industry. And so to break into a new industry where entrepreneurs were making money, you know, they had me come to panels. And so I met a guy in California that was connecting his BBS to the internet right now at that time. And he said, look, I've got investors, because I'm living in Wisconsin at this time. I have investors in California. I have these 14-year-olds that are tech support people, and their fathers are doctors, and they hate practicing medicine right now. And they're looking for, you know, they have connections back to China and Singapore, and they want to bring money into the US, and they want to focus it on the internet. So if you had millions of dollars, what would you do? And I said, I would franchise the internet. And he's like, franchise the internet, you know, because at that time there was a magazine in Colorado called Boardwatch, and it would kind of allow all the independents around the country to send their listing up there. And so if you got a copy of that, it would give you some of your options that might be local or long distance style to get into the internet. And I said, yeah, I would franchise this, let's get a common name around the country. And so I put that plan together, literally shipped it off to him. He called back and says, they're in, they want to meet you. I flew out, they committed $5 million. I mean, this all happened in an afternoon at a Chinese restaurant with a Lazy Susan, where all the different meals are there. And it's a circle table and you take a little bit of everything. And I got educated at that time that those tables are all round on purpose so that no one sits at the head of the table. But I mean, and now I'm shaking hands and we've raised millions of dollars. And I remember walking out of there going, is that how that's done? I walked in there and I'm not a college graduate. I hadn't taken business to this level of success yet. Later on, I asked them, I said, what the heck made you invest in me? What part? They said your enthusiasm, 100%. Your self-belief, your enthusiasm, your passion. You basically had us sold. You had us convinced. Beyond speculation of numbers and everything else, it was just you were so convinced that this was the way to go. We bought into it, right?
Wow.
So how long was that? How long was that runway with capital before it fell apart? And what'd you learn in regards to requesting for capital? Because they didn't just deposit $5 million in your bank account the next day, right?
No, they didn't. It was done as, this is where I start to learn things that I didn't know back then, and that's that it was done as a convertible debenture, and it was done in tiers, and we had to reach certain benchmarks for each tier, and they negotiated other rights to that stock, anti-dilution, and all kinds of different ratchets and things that, of course, I was a little naive to at the time, but just kind of seeing stars in the eyes. I'm telling you, in 1993, $5 million to this little, rural Nebraska boy was all the money in the world. Like, how could we possibly spend this money, right? Yeah. So within 9 months, we were out of money, needed more because the equipment costs, right when we roll this thing out, it's 14.4, then it becomes 28.8, then it becomes 56K. And back then it wasn't just a software upgrade. It actually required
all of your hardware. Is all of your hardware being deprecated month by month? Yeah.
Obsolete. Yeah.
Right. So there's a side of the business model, right? You could have never predicted, right? Like that's a fatal flaw in that business model. Right.
Could have never. The other side of it too is the telephone company ends up becoming our biggest competitor. And so as we're rolling this thing out, they're deciding on the back end, holy crap, all this money is being made on our lines. We should get into this business. And they started slow rolling things. And so that would slow roll all of our capital. And there's all kinds of fun horror stories in that one. But if you want, I can skip right to the right timing.
You have the right timing. Like you're in the right place at the right time with some potentially worthwhile partners. But like we talked about, the hardware becomes deprecated almost over the minute you deploy it. And then you've got AT&T essentially at the time and their equivalents all over the nation trying to stop you.
So guess what happens? So here's what happens, right? We roll it out and we're charging $19.95, and that gave you 20 hours. And this is during a time where long distance, whether it be cellular or landlines, you paid per minute, right? Mm-hmm. Everything, it was pretty expensive. Long distance back then, you could spend over $1 a minute on a phone call. And at that time, AOL, even when you called in, it wasn't unlimited. It was so much for so many hours, and you paid after that. So right after we do that, we roll it out. Sprint and AT&T announced they're going to play in this game, and they're going to be $19.95 unlimited. Well, unlimited for us, based on the math, it cost us $50 to deliver. So all of a sudden, we have 600 franchisees nationwide, and we're all charging $20 a month and, so much a minute after that, and AT&T and Sprint. And then right after that, AOL basically flipped the switch. And then a company called Earthlink starts to pop their heads up, and all these national providers, and they're all $20, and they're backed by PE, they're backed by much bigger money than us, basically like Amazon, right? They've been on this path for 20 years where basically Wall Street's paying for every package that goes out the store. Well, I couldn't compete with it at that level. And so that became our death mark. And we tried to reinvent ourselves at that point. But the problem this is where I learned the type of franchisee matters, right? So we sold to basically toll booth operators. I mean, at that time, if you put an ad in the newspaper or dial up internet, I mean, the phone was ringing off the hook because there just wasn't a lot out there. We were the first ones on the block. Well, when we told the franchisees, look, we're getting killed, bigger money has been attracted to this pie and they're buying their way into the industry. So we need to start selling websites. Well, I mean, the world is just getting connected to the internet. Google doesn't exist yet. And the beginnings of search engines, you had to go there and register your business in there, right? They weren't spidering the internet. Content had to be pointed to them. And so we told these guys they needed to start selling business websites. Well, that was a hard sell back then. I mean, it's a no-brainer today, but back then people didn't even know what it was and how it could benefit them and how people would find you. And what I found out is all my franchisees were order takers. They had not worn out the leather on their shoes and had raw knuckles from pounding on doors. And so we had to reinvent ourselves and go a completely different direction. But yeah, timing, a lot of lessons. I remember ultimately we didn't have to file bankruptcy. I was able to negotiate everything so that we could settle and buy myself enough time that the consolidators that were out there in the space were buying up ISP businesses for $1,000 a user. They just were gobbling it all up. And so we determined, we've negotiated on behalf of all our franchisees, we would let them out of their franchise agreement, and we pre-negotiated a deal where their businesses could all be acquired. They would actually make a tidy profit. They were the only ones that made money on the deal. My investors and I, we lost everything, but these guys saw another day, which was the heaviest weight that I had on my shoulders. I mean, my investors were parts of large organizations. This was a pittance to them, but I looked eye to eye to people that were leaving corporate America, cashing in their retirement fund, taking out, lines of credit against their houses. The future of their families were on the line here, everywhere from Norfolk, Nebraska to Los Angeles to Atlanta, Chicago. I mean, we were all over the country. And so that was basically me and our core staff, we worked for 90 days without pay because we were running out of runway at that time. And we transitioned all these guys that wanted to sell. And then there were some that were in smaller communities that didn't have a marketplace for the buyers, like your Norfolk and Columbus, Nebraska, Fremont, Kearney, those kinds of cities. But they owned computer stores, and it was still a viable business to them because AT&T and Sprint weren't there yet. And so we had to decentralize something that was very central. And so we spent 3 months where we were central authentication, centralized billing, centralized email hosting, and have to give them a business in the box so that they could operate without us. And so we basically had an amnesty day. Everybody released us of our 10-year obligation under the franchise agreement, and we released them of all their obligation to us. And to this day, I have people that, from 20 some years ago, or even their children, that'll reach out and have identified me somewhere and talk about those stories of those times back then with gratitude. And it's very heartwarming. But the end of the day, when that business closed, right, I had gone from a staff of about 80 all the way down to like 6 of us that spent those last few months. And the last day, my investor from Singapore flies over, and before we're shutting the door, he says, "What's next?" And I go, "Well, I got some thoughts and some ideas." And he goes, "Let's go talk about them." So we go to the same Chinese restaurant. I share it with him, and he says, "I like it. I like it." He goes, "How much?" And I go, "Well, I have a $500,000 plan and a $5 million plan." And he looks over at me and he goes, "Let me hear the $500,000 plan." And I told it to him, and in a handshake and on the back of a napkin, he wired $500,000 to me within 24 hours before we had an agreement, so that I didn't have to close that infrastructure and that core staff that had been through, the band of brothers that had been through the worst together. And I looked over at him and said, "You just lost millions of dollars, not to mention you brought some co-investors in of other businesses, so you guys all lost money together. Why in the world would you take another flyer on me?" And he said, "Chad, because we just paid for your college education and now we want to reap the reward." And I was, I'm like, okay. He says, I know that you just made 1,000 mistakes and the pain that you just went through. And, you know, some of it was obviously circumstantial, but everything that you've seen has value in it. And before you go on to that next thing that's, you know, I know you're going to have a hit on, we want to be a part of it. And that was a very humbling day. And we did very well in the next round.
So what was that?
So I had identified in all of that when so in the early days, there was a site called City Search. It actually still exists. It's not what it originally was created to be. They had hoped it would be kind of the hub for every city. You know, AOL, everybody was trying to create their hub for every city. Even all the search engines tried to personalize it. But one of the things that we learned when we were fighting it out, trying to compete with the AT&Ts and the Sprints, is we thought all these radio stations need websites, and they're not on the air yet. And they have the most to benefit from the internet because television has a face, radio didn't. Newspaper has things that you can print, and the web was going to give radio the ability to have coupons that could be printed and redeemed. And so we, you know, and radio never had a relationship with their listeners. And so we thought, you know, at that time I had befriended Seth Godin, and his book, Permission Marketing, really had a big impact on me. And so we were working on how we could help radio stations for the first time.
Right there on my shelf. No, Permission Marketing is right there on my shelf.
Yeah. I mean, that was a game changer for me. And, you know, radio, like I said, they didn't know who their listeners were. They never knew who was going to tune in the next day or how many of them were, but they were being paid based on the perception of who was listening. And so anyway, with all that said, we partnered with radio stations with our franchisees. So around the country, we would go to radio stations and say, we'll build your website. We just want you to promote our ISP, drive traffic to it. So the talent would drive traffic and sign up for our, you know, businesses. And it worked so well that at that time, consolidation started hitting the radio industry, and groups like Clear Channel and ABC and CBS and Intercom and all these major radio groups. Before, you could only have 6 AMs and 6 FMs, and all of a sudden you got Clear Channel with 1,200 radio stations. And so what happened is these guys would say, hey, you guys got this really awesome website, where'd it come from? And so there was this huge demand for us to do something that wasn't even our core business. We're trying to sell franchises and help our franchisees sell more internet customers. And instead, we got radio stations saying, hey, we need this technology. And so that became my next business. And we basically became the de facto standard for the radio industry. We hosted 70% of the 10,000 radio station websites in the country. And that kind of turned in. And then we went to Canada and Australia and Europe, and it just really blew up.
How long did it take from launch to critical mass? Like when you felt like you were hitting that tipping point where it was easier to onboard and attract the customers and get them closed than it was to have to pitch them all the time and get in front of them?
Yeah. So it took 18 months for two critical things to take place. So when we first started, we're just cold calling and we're trying to leverage the existing relationships we had. But very quickly, I said, who's got a relationship with all the radio stations in the country? And there were 2 national reps at that time, Katz and Interrep. And I picked Interrep because he just was somebody that I resonated more. And he was based in New York, and he was a public company. Katz was private. And I cold called the guy and pitched him on what we were doing with radio, and that I wanted to leverage his relationships and that he could benefit from the revenue that we were going to generate. And when we were sitting in there on our pitch, he had already had 100 pitches coming at him, and they were all promising, basically they wanted to, you know, their services would be for free and they would make all this money up on the advertising. And I was the first one that went in there and pitched it like a franchise play and how we were going to make our money. And he just looked across the table from me and said, you know, the first thing he says, first of all, you started this pitch out saying, I'm just this small town boy from Nebraska. He said, right away, I realized that you were more than that. And he said, secondly, you're the first person to come in here. Cause I looked at him and I said, look, Ralph, his name was Ralph Guild. I said, we've spent millions of dollars to get to this place, and I'm not going to sit here and tell you that I've got it all figured out, but I can tell you that there's 2,000 rabbit holes that we've already gone down that we want to let you or your customers go down. And there's about 6 things we figured out really work, and we're going to focus on those things. And he said that was the most sobering thing he had ever heard coming out of the internet guy, because everyone was promising the world at that time. Well, he then walked me in the door. Yeah. He walked me in the door to the CEO of ABC Radio, and we signed up all 40 of their stations at that time. And with that, I got a personal invitation to meet Mel Karmazin with Infinity, which is CBS television and radio. And I remember walking in the door, and it was the same thing. I walk in, and he goes, "Look, I want to make this clear, young man. You're only here because Ralph Gild asked for this appointment. And you've got 2 minutes to get my attention, or you're out the door." And I just looked at him and said, "Well, I don't know if I can get it out in 10 minutes, but he says, "Well, what do you do that's so much better than everybody else?" And I go, "Well, the only thing I can really tell you is there's a couple thousand things that we've done spending millions of dollars that I won't let you or your customers do again. And there's a half a dozen here." And anyway, I said the same thing to him, and he looks at me and says, "You got my attention. You got 20 minutes. And ultimately, I ended up getting, CBS. Well, at that point, when you talk about critical mass, when you're talking about branded radio, so Clear Channel actually became the biggest group out there, but they didn't have the brand back then. They do now, because they bought Outdoor, and they bought the venues, and they branded themselves everywhere. But come on, we grew up knowing 3 brands, right? It was ABC, CBS, and NBC, and that was from television. A lot of the world didn't necessarily know that they owned radio stations, because back then they didn't necessarily say the name of the ownership. You just heard the call letters and the slogan. But those branded names were very well known by all the other groups. And so before long, we're not pitching anybody. Everyone's saying, it's kind of like you'll never get fired for, picking at IBM.
IBM,
well,
right?
That
Yeah.
point,
Well, and that's what I was curious, because every home run business gets to the point where the customers, prospects are chasing them down instead of you chasing the other way. And so it is, to me, it really is a tipping point that, where does it change where you're no longer having to cold call your way in and make 100 pitches to get the one meeting, and turn that table. So it was about 18 months for you then. That's great.
Yeah.
Because that's the thing, like a lot of people, and not projecting onto anybody listening to this right now, but I think that's where a lot of entrepreneurs have the misnomer that if we build it, they will come, and this has got the world by the tail, and all we need is 1 or 2 great customers, and the rest will follow them and get that social proof. And I think like you showed, like you had to get some heavy hitters and have some traction of success to get their attention, and then you leveraged them well.
Right.
So what
and I
happened
gave
with
up
that?
20% equity.
Did you?
Yeah. That business ended very successfully. I actually sold it for equity to a company out of Minneapolis called Quick Pages, which became Annuity, and they had 100,000 small businesses around the country that were buying web pages from, or websites from them, and they had figured out the formula. But they basically made all their money with WorldCom, before the big problems with WorldCom. And because of those LEC relationships, they had call centers where they were winning over the long distance business. So they knew that whole business. And so they were now calling small businesses. And with that LEC relationship, they, on a single call, could sell them a 12-month website package without them having to put their credit card out, because the phone company would act as the currency. It would show up on the phone bill, and then, they pay them a 10% billing in it. And so they had sold 100,000 of them, but they started running into this problem of, now we have 100,000 customers and they have websites, but nobody knows the website exists. They're not, how do we let their customers know they're there? And so they acquired us because of all of our radio stations. We would put directories together in every city with all these pages and teach them how to put offers up there, right? And so that was the first company that I was in the process of the S1. That one did not end up going out, though, because we had Piper Jaffray, Prudential, and Robertson Stevens. I remember the day they all drove in their limos. It was amazing. All just coming out in their suits and their expensive shoes and fresh haircuts, and sitting there lined up on these long board tables, and the analyst sitting there asking all the questions. And again, my head spinning, because this is only a few years after I moved to California, and all of a sudden we're going to go public, and it's being projected to be $1 billion IPO. We did a $60 million mezzanine round. I remember they looked at me across the table and said, "Son, you've got about 60 people and you need to hire 100 people in the next 6 months. And I'm looking on going, what? What am I going to do with 100 people? We just raised $60 million. And if we don't demonstrate we can spend it, we're never going to raise any more. And I remember.
if we don't demonstrate we can spend it.
We lost your audio.
You, Chad. Your audio's dead. Did your cell phone die?
Chad.
Your audio's gone. We can't hear you.
We can't hear you. Uh-oh. We lost. Is your phone, did your phone hang up, Chad?
Yeah, it says his phone hung up. Let's see. I'll send him.
Hello?
Oh, there we go. You're back.
You hear me?
Yep.
Okay, so if you don't hire
I guess the call dropped.
If you don't hire 100 people, we'll never get the next round. Just keep going.
Yeah, so, basically they looked at me and said, this isn't a request, this is an order, and we're never going to raise more money if we can't demonstrate that we can spend the first amount of money. And I told them, I go, well, I can't guarantee an ROI on these 100. And they said, we don't need to show an ROI. The faster we show an ROI, the quicker we're worth less. It needs to be a mystery. People can't figure it out. They need to be able to extrapolate it on their own. The more you lose, the more you're worth. And I'm like, what the heck? But that's the world we lived in. And, wasn't like literally 1 week before we're supposed to be ringing the bell, the whole market just went to hell. Now we spend the next 2 years right-sizing.
This is when? This is when?
2001.
Pardon me?
This is 2001 .com crash?
Correct. No, before. No, the .com crash was before 2001. Wasn't it 2000?
It was, I forget one or the other.
It's like 99, 2000. Because in 2001, I was already moving on to buying myself back. So I had sold my company for equity in what was going to be $1 billion IPO. And, 2 years later, I'm raising money to buy it back. That was interesting. Selling it for paper that, I could use to light a fire with. But we learned a lot during that time. That is a lot of the things that we spent millions of dollars on to learn half a dozen things that really worked during that time. Anyway, so what happens after I buy the company back is very quickly there's a lot of funds that had lost a lot of money on .com businesses during that time. And so a lot of these venture funds were drying up and they needed a Hail Mary, or they were about to, they wouldn't have even the funds left over for the managing partners to continue to pay themselves. And so they needed to consolidate some businesses and really have a home run. And so they were consolidating an industry. I had competitors out there at that time that had hundreds of millions of dollars invested in them, and they were trying to make it all up on streaming technologies. As a matter of fact, Mark Cuban was one of those competitors, and they came to us for an investment. And it was because of Mark Cuban's success when he sold to Yahoo for $5.4 billion that the radio industry basically closed down to all technicians after that, which will lead into my Google sale later on if you want to go there. But anyway, all the money in my space to work with radio stations was they had the streaming content. They were trying to repurpose over-the-air content with streaming content because they believed that, people from cities that they grew up in wanted to listen to the radio station in that community, or that it could allow them to syndicate talk show hosts into different areas where they weren't on the air, but they could be online, or you could listen to your alumni college football or basketball or whatever. This was the big race. And so they were spending tens of millions of dollars. And at that time, they didn't have a standard for the streaming technology. So the decoding had to match, and there was no standard. So, every company was fighting to be that standard. I don't know if you remember that time. I think, yeah. So everyone had their own standard. And Mark Cuban's the only one that actually made money on that deal. Everybody else lost tons of money. Anyway, so these funds were coming together, and they were bringing the top of every industry. So we had the market share for radio. There was another one for television and another one for newspaper, and they eventually acquired us. At that time, I did not want to sell, but my investors who gave us the money to buy back, these are the same investors that gave us the money to start it when we sold it for equity in a company that ended up not going public. They had a stock market crash in Asia, and they were margined. Their businesses were all margined. And so they were coming in and taking their homes and stuff. And so they asked me to sell. And so we sold, and they made a tidy profit. And that led into the next business that we ended up selling to Google. But we did very well. But, you know, the thing is radio, the biggest thing that I learned in that one was the value of relationships. And the radio industry is a good old boy network, and it's all relationships. These guys are second, third generation. These guys are all, you know, in the back room smoking their cigars and drinking their scotch and their brandy, and all the biggest deals were being done in that way. And I mean, when I say second, third generation, I mean, you know, Clear Channel was the father started it, and then the son was the president, and the other son was the CFO. And I mean, you know, Intercom's the same way, all these big groups. And a lot of my competitors in that radio space had similar relationships. Well, besides creating this pain of disconnect where nobody, you know, they were afraid, I disproportionately brought so many services together under one connection that if they were to lose me, they would have to replace me with 5 other vendors, you know. So we had a high pain of disconnect there. We had very strong relationships. And when that company bought us, I remember telling them, if you replace me, because they brought a GE guy in, you know, with some PhD in psychology to run the company. And I told him, I go, guys, in this industry, I know all the CEOs of the major radio groups, and they know me, and I know their kids' names. I know their favorite cigar. I know their favorite wine. I know their wives' names. I know the college they went to. I mean, these are relationships, and we're very entrepreneurial, very personable. If you bring some corporate guy in here, you're just going to open up this huge opportunity for the competition to come in and just kill it. And they did. At the time that I sold in the business, we were doing $32 million a year in revenue, and they had it down to $2 million in 2 years.
Let's do a webinar with that guy. Wow. How do you do that?
So we've gone over a lot of your learning curve and some bumps and bruises. Let's dig into one of the wins that you compiled all of that learning curve into.
I'm not hearing you very good. Do you hear me well?
Yeah, we
you're
hear
crystal
you fine.
clear.
Okay, Josh, you were cutting in and out when you were talking to me. I heard about every other word. I'm thinking I'm going to try and call back in again.
It's all good. Yeah.
Can you hear me?
Yeah, I hear you too. Are you guys hearing me fine? As long as you're hearing me fine, I just want to make sure I'm not cutting out.
Barry, was I cutting out to you?
It was fine for me. So tell us about the Google deal. Kind of brought a lot of this learning all together.
I'm sorry, boy, I'm not hearing you guys. Josh, do you hear Perry?
Yeah.
Here, let's see. Can I chat to you?
If I click phone, I lose you on.
Now he's gone.
Go back to what you had. Sorry, everybody. We'll straighten this out. Hang on a second. So, Chad, check the.
He should be able to.
Sorry, everybody. I'm not sure what happened. So, I'm giving Chad a message
Instruction to look at the chat.
In the chat box.
Looks like his phone is wanting to connect. I think he's got to add.
I called. All right. Sorry, guys. I don't know.
Good.
Something going on with it. So you said something about transitioning to Google.
Google, yeah. So tell us, we've talked a lot about your learning curve and some of the mistakes and things that you learned through. How does that all roll up into the success with Google? And
So I was talking a little bit about that. So I met Mark Cuban 2000, 2001 when they were on their like third round of funding. They were they were trying to become the de facto standard, and they thought that what would give them the leverage to be that standard, that codec, so that everyone would download their player instead of the real player or Microsoft player, is if they tied up the agreements with the top couple hundred NCAA Division I schools, so they could basically stream their football, basketball, hockey, whatever, all the different games. And this is before satellites really taken off. There's really no other way to get this kind of content at that time. And so he cut a deal with 200 stations that had the rights to play those games locally, but there was no way to get it beyond that local market. And they basically determined, even though it wasn't covered by the agreement, that because they had those rights, that the radio station also owned those rights to the stream, which no one had even thought of would ever exist at that time. So based on the strength of that agreement, he sold the company to Yahoo like 6 months later for $5 billion before he could ever monetize it. Just basically saying, I got the leverage, I got this content that everyone's going to want. And so he sold it. And Yahoo thought also that would give them the ability to have that standard for that player for the streaming content. Anyway, radio at that time was an $18 billion market. So here you have an industry with 10,000 radio stations in the United States, and all their revenue combined is $18 billion. And you got Mark Cuban, who sells his company for $5 billion for the rights to streaming rights to 200 stations, right, that he didn't even own. And radio didn't get a nickel. So that's when the whole radio formed a consortium, and they banded together, and they basically said, we're not going to work with outsiders. We need to figure this stuff out on our own, because these guys are coming in and stealing our assets and our value. They didn't own a stick. They didn't own the talent. They didn't own the station. They're not paying any of the staff. They don't have to work with the FCC and all the, and they made $5 billion on a piece of paper. And so they were just fed up. And Mel Karmazin's the one that kind of drove that bandwagon. I don't see you guys. Do you hear me?
Yeah, you're perfect. We see you.
Yes.
Okay. So I don't know. I must have a bandwidth issue on my end. You guys just went dark, but as long as you can hear me. So what happens is I've sold my company. I fly to New York. I meet at the Harvard Club. It's an annual event where all the radio owner groups are there, all of the PE groups and venture groups, all the money that's in the radio industry is there, basically the whole financial community, all the top agencies in the country are there. And this is where they sit down and they basically look at all the numbers and stats of the last year, everything that's going to go on in the next year, where the capital needs are, where the growth is, where the formats are, what's the trends in advertising. It's basically all the top guys all arm wrestling over the way things are going to go into the future. Analysts are all there. And while I'm there, I meet these guys that I knew in Orange County, and they had written the first ad serving technology that decentralized ad serving, so that, in the very beginning, when Yahoo and Netscape and GeoCities and all these sites first launched, that there were no ads on them. And they created that technology and centralized it in a way where you could follow the advertiser around. And so they took that company public and ended up selling it for $1 billion. And they're getting into the radio industry, and they're thinking, radio has 10,000 stations and they have 10,000 ad servers. They're the way the internet used to be. They haven't figured out this economy of scale where you can serve the ads to all the stations from a single location and have all these efficiencies as a part of that, and have it scale so that when a national advertiser needed to get on 200 stations, he didn't have to negotiate 200 contracts. It could all be done centrally. Anyway, I run into them. These guys had this patent for this technology, and they had been trying to bang on the door for radio for 2 years, and radio wouldn't answer their door. And they see me on the way out. I'm going to go to London the next day to introduce my replacement to all the radio heads over there. And they looked at me and said, you need to join our team, because we got the one thing that we think is going to revolutionize the radio industry. CPMs on radio were actually lower than television and newspaper. And so they thought this is the one thing that could make radio more valuable than all the other medias. And, we want to save radio, but they won't listen to us. So anyway, long story short, I ended up doing a deal with them. I came on as the chief marketing officer. I came on as an equity shareholder. I insisted that I get on. And this is funny. They're investors because they had already done a $1 billion deal. Their investors were hedge fund, which typically don't do deals like this. They don't do venture type deals. Hedge funds have to have a lot of liquidity in a deal, because that's the whole meaning of hedge. They like to go long and short and make the money on the in between, right? But in this particular case, they created a separate fund and changed the bylaws so they could be in this deal. So they fought pretty hard to keep anybody out of it. They were pretty excited about its potential. But anyway, I came on as an optionee holder and an equity holder, and sat on the board. And my job was within 12 months to get them into 800 radio stations, and that we would have the patents and the leverage and be at this tipping point where they believed we would sell to Google, Yahoo, or Microsoft for over $1 billion. At that time, I had already ridden through the .com blow up, and I'm thinking $1 billion deals are done. But I thought, hey, we're valuing it at $60 million. If we sold for $300 million, that's a 5Xer. I'm happy with that, right? Well, I kid you not, a year later, me, having had worked for a decade with all these radio heads, was able to get us into a couple thousand radio stations. And I'm telling you, a year to my hire date, we had a couple thousand stations on the system, and we had a term sheet from Google for $1.28 billion or something. And I mean, boom. and then there's a whole story behind all that. I mean, I'll tell you what.
So you got to, it's not just the learning curve, it's also all those relationships, right? Like that relational capital that you brought to the table.
Absolutely. And look, there were a lot of things that took place. I learned more about leverage. I never really felt like I had extreme leverage like I did in that deal. And here's a few things that happened. So the first thing we realized when we did this deal is, for this to work, there were 5 different companies that had hardware sitting in all the radio stations. And the automation system is it's the last piece that decides how every second is going to sound on the air. So it brings all the commercials and all the algorithm, what songs are going to play, and all the station mentions. It syncs all that up and points out all the holes and then what needs to be done with it. We talked to that because that's where we could see the inventory was unsold and we could fill it. And then we would split this revenue with the radio station, right? Well, we knew that was a leverage point that if we didn't own, they could use against us down the road. When they saw how valuable that connection was, they would want to charge us a percentage of that revenue. So part of that money that we raised, we went out and bought the largest 2 players that represented 70% of the marketplace. And then we just built in the connections we needed. By the way, I'm skipping a lot of stuff. Do you understand what we did, what DMARC did? So what DMARC did, there was a 3-year period that when you logged into your AdWords console, you could actually buy radio. It was called Google Radio. We powered that. Our technology allowed you to go to a marketplace, create a commercial, define the demographics or the radio format or the time, whatever. You would define different things that would then say, here's the list of stations that fit that criteria. And you could have that radio commercial on the air the very next day on numerous markets, right? But where it was really powerful and why we were able to get what we got was the fact that we could, for the first time ever, we had perfected, what do you call it? Direct response radio, right? I mean, you already had kind of direct response, but the thing is the feedback loop back then might be 30, 60, 90 days. And so you couldn't do fine tuning on the fly because it took you 30 days to negotiate it. It took you 30 more days to say, here's what played and what didn't play, trying to tie all that back together as to who played what when and did the campaign really work. Well, now all of a sudden we're in real time and you're looking at a control panel and it's saying this is playing now, this is playing now. We could insert dynamically call tracking numbers for every single market. Here's the copy that's playing. The system using an algorithm could say, this copy is actually working better. So the next time that commercial plays, replace it with this one, or this whole region of the country is not working, shut it down, play this instead, double up over in this region. I mean, all these things could be done that couldn't be done before because it was still archaic. I mean, literally what you hear on the air in the current day was decided 24 hours ahead of time and it was locked. There's no if-then statements at that point. It's manually said, here's what's going to happen every second, and now it's locked and cannot be changed. With us tied into that system, we could make a change 3 seconds before it's about to air and say, nope, this is what you're playing instead, right? And now all of a sudden we can go to McDonald's and say, hey, I know you lock in your campaign for a whole quarter, but what about if the temperature's above a certain range, we play this commercial. Like if it's over 90 degrees, we're going to play, milkshake commercials. And if it's below 50 degrees, we're going to play coffee commercials, right? That could never be done before. Or you go to the financial industry and say, if we're in a bull market, we'll play this commercial. If it's in a bear market, we'll pull all your stuff off. Or the pharmaceutical industry and say, if allergens are at a certain place, this is when we're going to promote the pharmaceuticals that are for allergies, not the other stuff. The same thing with plumber. Or you could go to the air conditioning guy and say, hey, we never know what the weather's going to be each day, but we know when it's hotter than hell, everybody wants air conditioning. And here's our price, and we will only play it when it's above 100 degrees in the marketplace. And so we could do all of that. And so for the first time, all of a sudden, radio could see this opportunity of doubling their revenue. And we were testing it all on their unsold inventory.
The remnants, right?
Powerful. What's that?
On the remnants, right? Yeah,
all the remnant. At that time, people were selling it as remnant for pennies on the dollar. We wouldn't even sell it as remnant because our algorithms could predict the reliability of how much of this we could get. And by pooling it together in a market, we didn't call it remnant. We knew historically what we could rely on, and we sold it as guaranteed revenue. And we were making more on it than what they were selling it in locally. Well, that scared the hell out of radio. That's where, Perry mentioned we were sitting down with Eric Schmidt. And this was after I had arranged a 2020 interview at the national conference for radio and television. And, at the very end of it, we go back with Larry and Sergey and the radio industry and Eric Schmidt, and they all band together and basically say, you're too powerful. And agencies that would normally buy from us direct now are preferring to buy through you. And so we want to limit your inventory. And in that meeting, going back and forth, Eric Schmidt, after 3 years of doing what we were doing, pulled the plug on the whole thing and shut it all down. Basically said, radio, you got your head's buried in the sand and you're a dinosaur and you're going to go by the way of the dodo bird. And that was it.
Wow.
I shortchanged a very long story there, but I'm trying to be
no, it's good.
Sensitive to the timing.
No, just to be clear, you got your money, and now at this point you're working for the company. What? Just explain, so the ideal failed, but you sold the company, right?
Right. So yeah. So look, at that point, I had what they call golden handcuffs. So in order to get my money, I had to be there. Me and the primary people had to be there for 3 years, and we got paid in tranches over a 3-year period. That 3-year period was up at that time. And there were 300 of us that were part of the company when they acquired us. They basically told everybody that you have 6 months. We're going to pay you for 6 months, and you can either come to work every day and try to find a new job, or you can not show up, but we're going to pay you for 6 months. And if you found a new assignment at the end of that time, then we'd love to keep you. And of course, me and the whole, all the entrepreneurs left the minute they said, you had me at hello. So
yeah, 6 month vacation.
We walked out the door.
Right.
Yeah. Now, but, and Perry, I've shared with you, this is a time, this was actually a very hard time for me. This is one of the largest successes that I've achieved. And this is at a time where I'm thinking I should be the happiest that I should be in my life. And this is at a time where I fall into a deep depression. I start questioning the existence of God. I start to wonder what the hell this game of life is all about. And, I found more happiness in my struggles and trials and tribulations that I did in my success, where all of a sudden I come home and I look at my wife and I realize we don't know who each other is. And I missed a decade of my kids growing up, and just things didn't kind of fall together the way I thought they would. Right. And, that's, big thing that I learned through that is I was delaying my joy, saying that my joy and happiness was dependent on reaching a certain level of success. And until I get there, I don't have permission to experience life and joy, that I have to do this one thing. And then you get there and you find out that you just left carnage everywhere. And, the things that you treasure the most, now you have to go back and rebuild. So just don't, I focus right now on, I only spend time doing things that I can do with balance. And I try to find joy and gratefulness in everything that I do, because it is not the destination. The problem with us entrepreneurs is we never get to the destination. It's like the horizon. It just keeps moving. The closer we get to it, the farther away it gets, right? We keep changing the rules. And so you have to find a way to be passionate about anything that you go ahead.
The biggest perspective giver for me was getting a motorcycle, because when you're on a motorcycle, you don't care about the destination. You only care about the journey. And you want the journey to be windier and bumpier and more challenging to make the ride last longer. That was a good perspective giver for me.
So that's my little two-door sports car, or two-seater sports car now, because my wife doesn't want me to be on a motorcycle anymore. In Southern California here, it's almost a suicide mission. People ignore you.
Yeah, right.
But I'm with you, brother. I grew up on a motorcycle, and that was the closest thing to heaven until I got my pilot's license. I love, there's no better therapy in the world than flying through the clouds for 1,500 feet and coming out above. It's just like it's a thin place.
Yep.
You feel like you're just inches away from God's presence.
Yeah.
So I think this is all very interesting, and it's also very complicated, right? And okay, so you're like a quintessential serial entrepreneur, right? In fact, you could look it up in the dictionary and maybe your picture would be there, right? All these, all these different things. And there's a bunch of really interesting parts to it. So you were a key player in selling a business to Google for over $1 billion, right? And you're rubbing shoulders with some of the most powerful people in the world, in the internet and in radio. Really what you've done is you've bridged two industries together, which notice that is very, very, very frequently a success formula, is you bring two worlds together and you make connectors between the two and you make things flow, and then all of a sudden, right?
Yeah.
Right. Okay. And you made a lot of money, which of course that give you a war chest for later being able to do a bunch of interesting things. But you also had an existential crisis because I could totally relate. When you talk about postponing joy, what I relate to is basically my Amway pink Kool-Aid days. I completely postponed the rest of my life. I'm going to do this, right? And I couldn't get it to work, but I have completely denied myself permission to basically have any form of fun doing anything, and I'm just going to grind away at this thing. I think I actually figured out how to have a much more balanced life when I started doing what I'm doing now. But most, I don't know about all, but certainly most of the people that I've talked to who had a big liquidation event found it to be a shocking experience. Could you talk just a little bit more about that? Because we like to tell the whole story.
Yeah. So a quick side note, I was also in Amway and two other multi-level marketing businesses. So we have that in common. I don't know what it is about Planet Perry. So the liquidation event, and how do you mean? From what standpoint?
Well, you got a big pile of money when the thing got sold to Google, and you thought that was going to make you happy. But so explain more about that.
Yeah. Well, I mean, we can talk about the money side of it, and then we can talk about all the carnage the sacrifices that I made to get to that point. And now all of a sudden the need for cleanup and reentry.
Sure.
On the money side, look, it's interesting, but we all have different goals. And, so first of all, I come from small pickings, and I just say that to say that, look, I feel very blessed. It's funny. When you're in the middle of what you're in the middle, I mean, you watch TV or look at people in different areas of the world, and you look at them with this empathy and sympathy, whatever. You look at them and say, gosh, I got it so good, you got it so horrible, you know. But I remember going to the Philippines and seeing people, these little kids running around the dump site, throwing freaking rocks at cans and laughing like my kids at home playing PlayStation in front of the air conditioning at home, you know, the same kind of joy. And so, you know, that was the first connections to happiness being here, and that you can control it all here. And growing up south of the tracks, and I mean literally, I grew up in a small town in Nebraska. The railroad tracks was 100 yards in front. The cell barn is like 50 yards to my right side. And for those of you who don't know what a cell barn is, that's where in rural areas, that's where all the farmers, and in our case, within the 30 to 60 mile range, they would bring all their pigs and sheep and horses and cows. They bring them either for sale for breeding or for slaughter. And the slaughterhouse is right next door to that. So we smelled, I mean, you had the smell of manure in the air at all times. And, you know, the school, the whole neighborhood, if you live around that, or if you grow up on a farm, you take on that aroma. And so when you go into town, you don't even smell it on yourself. It's just there. But I remember our school, our area of town stopped growing, and so they couldn't support the school anymore. So in the 5th grade, when I was 10, we had to go to a school 6 blocks away or a mile away and get bused there. And when we walked in, I remember all the kids looking at us and pinching their nose, and we're like, what? I mean, we didn't smell ourselves or each other, but these kids are all, pew, you stink. And I remember when it finally came clear, you know, they're all telling us what's going on. I remember weeping at home about how we were being picked on and separated because, you know, we live here. How come we can't live somewhere else? And my grandpa laughing his ass off at me. And he looks at me and he says, son, that there's the smell of money. and, you know, it took a little while for that one to sink in. But when I look at that, I think about the parable for life that was in there, you know, that, you know, the people that think that things are going to come easy and there's not going to be a smell with it, or there's not going to be sweat and there's not going to be work that's behind all that, and to appreciate everything. So I grew up with absolutely nothing and all that I wanted. It wasn't that I needed this huge house or that I needed, you know, this huge troughs of money, or I needed to own airplanes and all this different stuff. The things that I were working for is I just wanted my wife to have the option of not working 2 jobs around the clock. I mean, when we were the kids, I came home, we fed ourselves raw men and macaroni and cheese and hot dogs, you know, and we mixed them all together. Our kids look at that and go, what? You're going to put hot dogs and macaroni and cheese? And, you know, I just wanted the ability for my wife to have the option of spending time and influencing and raising the children. I wanted the ability to be able to help them get into school, not to pay for their full college, but to help get them in and to help maybe prime that pump and to be able to take a vacation together with the family. I mean, vacations with my family were going to the Elkhorn River and pitching a tent. And, you know, there were no running water there. If you wanted to wash your hair, you did it in the river. And if you had to go to the bathroom, you dug a hole. You know, I remember the first time I camped in Wisconsin where they actually had, you know, bathrooms. I'm like, this isn't camping. This is like hotel. But coming from that place, so when the money was there, it actually wasn't this big thing that I like, you know, now I can go buy this and I can go buy that and I go buy this. It was just, I wanted it to just give me peace that said, I don't have to worry about all these things that my parents struggled with, you know, that their biggest fights were always about money and time with the kids and not being able to do this for the kids and do that for the kids and all the struggles that went on there. But the challenge is when we got to that place, now I'm trying to interface with my wife, and because I was gone for a decade, flew 2.5, you know, I have over 2 million miles with American Airlines, and I'm not proud of that. I mean, when I look at that, it's several years of 40-hour weeks on an airplane, you know, and that's missing the first steps, the first time they ride the bicycle, the first words that come out of their mouth. And what happened is my wife got to this place where she stopped complaining about it, and she just built a life around her. And when I wanted to now be a part of that life, there was no dependency on it. It was hard. Like, what does that even look like? You know, I don't need, you know, I got this handled, honey. You know, Matter of fact, I'm thinking now I can work from home and I can spend more time at home. And instead of 10 years of when are you going to stop traveling, it was like, when are you going on your next trip? And so it just kind of turned things upside down. And I did. My faith at that time, was kind of inherited. It's just like I didn't know the origination of why I was so driven to want to run a business, or I didn't understand why the grass was green. I was just told it was green. The sky is blue, and so my faith was the same thing. I was just kind of raised in it, and it had been challenged a lot throughout. Especially all my investors were Chinese, and so they're questioning why Christianity is the way. And I don't want to turn this into a big sermon here, but I just finally got to this place where I'm like, you know what? I don't know. I don't have any idea. Does God really exist? And so I got into a very dark place, and actually I was questioning the meaning of everything. I mean, is this just a big sick joke? Are we just thrown in this maze and we run around and chase our tail and we get to the end and get to the cheese and find out, like I was already eating before I got here. And so now what?
Wow.
But going through a series of apologetics, going to marriage counseling, actually recommitting to my faith, learning how to love my wife like Christ loved the church, which was that was a hard concept. That one took a lot of introspective to understand what that really meant. And when I finally got to that place, things started coming together. And the beautiful thing is I have never adjusted. I live in the same, when I moved to California in 1994, I had $3,000 in the bank. 3 years later, I bought a house. It's the same house I live in today. I mean, we've had opportunities to buy the beach house and the vacation house, and I throw it out there, and the wife's like, no, I'm happy right here. Let's rent when we want something. She's like, I don't want a house on the beach. People will be trailing sand in all the damn time, and, all the maintenance that goes along with it. And I'd rather rent a different house every time we want to go on vacation. So praise God, I married a Midwestern woman who didn't grow up with entitlement and never was dependent on reaching certain levels of anything on her success or for her happiness.
She want to be on the next Real Housewives of San Clemente.
No, she won't even watch the show. But I remember coming home and she's always like, honey, I want more time with you. I don't care. All these things that you're shooting for, they're not important to me. I would live in a grass hut, with a gunny sack on, and I would look at her and laugh and say, you're kidding yourself. You don't know what you're talking about. You'll see. You really want these things too. She really never cared. I mean, she's the. I think she was an angel, is what she was, and is, and she. And so here's the other thing. So look, part of reaching some of the success I did, you do a little self-promotion. You meet people and it's like, hey, I'm Chad Meisinger. I sold the company to Google for $8 billion, for $1 billion. I mean, it's like these things come out in the first several minutes of your conversation because you think you need to establish the pecking order of the room and who's done what, and those things made my wife want to vomit. And actually they created distance between us because she married this very humble, Midwestern boy. And after a while, she's like, did I ever know you? Like when you put that mask on, and, of course she didn't. Like, I have learned that we have these masks and we put them on for the one we wear at church, the one we wear in the neighborhood, the one we wear with the other kids as parents, the one we wear at work, the one we wear with investors, the one we wear with shareholders, all these different masks. And it's finally getting to this place where you're the same person in all areas of your life, to actually get to this place where you are just so at peace with who you are, all of your brokenness, that's who you are. And that was the biggest, when my wife didn't trust me anymore, it's because the person that I was saying that I was didn't align with the person that she knew when she got married. When she's sitting in conversations and I'm self-promoting myself, or instead of enjoying a nice glass of wine with the neighbors, having to say, that's a $300 bottle of wine, she hated that. She would want to leave the room. Like, why did you have to say that? Why do they need to know how much that wine costs?
Ego posturing, right?
Yeah. So
no, and I think you're right. I think that those masks are a great way to put it. And I mean, Perry and I have had these conversations over the last couple of years of being more of our authentic self and stop filtering ourselves, because I would say those masks are filters, right? To obscure something that we don't want people to see. And it's not that we need to walk around buck naked and show everything to everybody, but we don't have to be that transparent. Sometimes the world can't handle all of us, but it's reducing the filters. Yeah, I think that's those masks are a great way to put it. So we've talked a lot. We're well over an hour into this. Perry, what would you like to have as the next step? We've got a lot of people that have hung around. We're glad that they're getting value from this.
I have a couple of thoughts about what's been said. I'd like to explain what we're doing with Chad now, and I'd like to wrap up by just Chad kind of giving you an idea of what he's been doing for the last few years, because it's kind of interesting, right there. So he was, banging through the pinball machine for a long time, finally had some successes, has a little existential crisis, and then kind of evens himself out. And then, okay, so what do I really want to be now? And so in a few minutes from now, I want to, Chad, have you just kind of bring people up to the present so they kind of see how you put it all together.
And how you have your cute little avatar designed right behind your head there. So
yeah, you can even talk about that, because that's fitting, right? So, but I just want to, I want people to hear the whole story. And this whole crisis that Chad had of, well, good grief, like, who am I? This is very, very common when people have a big financial spike. Okay, when they hit the hockey stick, it's very common, and it's not that, like, I'm not in any way against having that spike, but I don't think too many people ever tell you that that's coming. I mean, did anybody tell you that was coming? It's almost.
I mean, the closest I came, there's a book out there called Halftime, but you know what? Regardless, until you're in it, in that suit, you just, first of all, you're in denial. You're like, no, everything's gonna be great. What are you talking about? When I get there, I'm not gonna have a care. I'm not gonna have a worry in the world.
Especially because so many business owners are so tired of robbing Peter to pay Paul to keep the bills paid,
right.
And I don't have that pressure anymore. And I think this is where, just as society as a whole, playing armchair quarterback on the wealthy, you're putting in all this effort to try to get money, but then they don't realize all the effort to keep that money, and that becomes a full-time job in and of itself, or else you end up like all the lottery winners, right? So in addition
Absolutely.
to the internal
for a long
roller
time,
coaster,
there was actually more stress on how the hell I was going to keep it than it was to actually make it. Because when you're making it, you're just running and chugging, and you're just creating it and
I
running
know
towards
a lot
goal.
of entrepreneurs that are really high earners. They are great at making it and great at spending all of it. They have no idea how to keep it, and so it becomes a shift, right, of skill set. But in addition to the huge internal roller coaster of emotion and awareness. So
agreed.
So I want to put that out there, and I want people to hear the whole story. And I've been collecting, these different people, different experts, different people with skill sets, and really trying to create a dream team and trying to create something where when people start building businesses and start getting to where they're successful, that there's a next and there's a next and there's a next, and that you can keep on the journey,
and that it's not that you don't run into the Peter principle of entrepreneurship, right? Because we know so many businesses that hit this quick little hockey stick growth and then bam, right into a revenue plateau. And it feels almost disempowering to think, what happened? I had the world by the tail. What was going on? And now am I out of my depths? And a lot of times it's just one or two little things that, yes, you are out of your depths. Change this, learn this new skill, get this guidance. and then you can get back to that restarting the growth. But I know you guys have seen it more than I have, but I've seen a lot of businesses where they get really fast. They find a product market fit. They get past $1 million, $2 million, $2.5 million, and then just kind of peter out. 5 million. It's a lot lately. I've had a lot of clients lately that are just stuck at 5 million for a decade, and that you don't have to. And so I think that's where Perry talking about this dream team or resources that can help you get past those revenue plateaus.
Right. So we started Advanced Mastery Network, and the idea was, we've got a lot of people in Planet Perry where it is possible to grow your business and sell it for $5 million, $10 million, $50 million, $100 million, and people are doing this. I've had, in the last 2.5 years, I've had 4 different people sell their companies in Planet Perry for anywhere from, let me say probably 5 people, anywhere from $5 million to $130 million. And I knew, in all 5 cases, I knew it was going to happen before it happened. I knew they were on their way. When FanDuel happened a long, long time ago, I kind of learned my lesson. Okay, you need to start watching for these things, right? And I know what they look like. I know how to identify them. We know the conditions. The Rosetta Stone seminar was basically about how you create those conditions. And what I wanted to do was I wanted to create a dream team where if you're on that kind of trajectory, that all the expertise that you need is at your fingertips, and you're not lacking for anything, and you're not caught not knowing what you don't know, because you're surrounded by people who know what you don't know. And so we're doing that. And Chad's on the faculty. And so it's a year-long program. The fee is $39,000. We work together for 12 months. We have a couple of in-person meetings. We get together virtually a couple of times a month. I dig in. I understand everybody's business, and we figure out how all these people work together. And I'll just share my screen here. If you are interested in finding out more, you can email Josh Long, josh@joshualong.co, and you can have a phone call. You can talk about it. We can explore.
And the reason you're talking to me is because we've got two profiles in Advanced Mastery Network. We've got what we're calling the aircraft carriers, or the businesses, and then the fighter jets, or the consultants. And so obviously I'm a consultant. I've worked with Perry for a number of years, and we've got equity client that we work together on, and I handle the implementation with the business owners. So that's why you're talking to me. If you're a business owner wanting to get in this, if you're a consultant, I'll still talk to you. But obviously this webinar was positioned for business owners, and I will be talking with you of where the leverage points are that we see that you could take advantage of by joining AMN. So there's no hard pitch. It's a qualification base. We don't want this to be a state where you're having to beg, borrow, and steal to come up with this fee, because neither Perry nor I want that pressure of a gun to our head to have pull a rabbit out of our hat in the first 30 days to get you your revenue bump. We don't expect you to just cut a check. You don't have to be in that spot, but we don't want this to be a Hail Mary to save your business. So there is a good qualification through this. I've talked with a dozen business owners. I've only invited one in, so that was a fit. So there's no pressure. So reach out. We'll get you on my calendar and talk through it. And even if you think it's a long shot, this was the thing we found at Rosetta Stone, was how many business owners I went up to after discussions that I had that didn't come to me for various consulting discussions that I expected them to come, because I knew their profile. I knew who was coming to the event. And so many of them, I think this is the biggest blessing and Achilles heel in Planet Perry, is most of the business owners aren't tooting their own horn, don't overvalue their ability or overvalue their potential. And so they self-deselect. So if you're on the fence, you're not going to waste my time. we'll work through it and figure out if there's a fit. And if it's not, I'll give you some great free consulting and point you to some other resources. But that's the reason you're talking to me.
And I know that there are a lot of businesses that if they're adjusted and steered a little bit differently, they could have huge windfalls.
And I'll tell you that probably the biggest thing that you probably have in the back of your mind is you have a hunch of what that thing is, but it's a little hard and it's a little boring, and you'd rather go focus on the other new shiny stuff or the novel stuff or the other areas where you get more kudos, but there may not be as much of a business there. And I'm not going to beat you up over it. Entrepreneurs have ADD. I know that. We all know that. So we want to highlight, though, your biggest path and your biggest levers to growth and to getting what you want out of a business. Because at the end of the day, if you're not getting more time, more money, and more freedom out of your business, what's the point?
So you do this, and you find the missing pieces, and you grow your business, and then there are crossroads that you're going to reach. It could be, okay, so now I actually have to go raise some capital. That could be something that you end up doing. Or, okay, like, it's time to sell my company. I got people offering money for it. Like, how do I negotiate the exit and get what I want out of this? Well, I was talking to Paris Lampropoulos a couple days ago, and he said, well, there's founders of businesses, there's operators of businesses, there's people who scale businesses, and there's people who figure out how to exit businesses, and they're all different skills. And a person that has one skill may not have the other. Well, the idea with Advanced Mastery Network is we have all the skills in one room. And so let's say you got to a point where you're selling a company. Do you think it would be to your benefit to have Chad looking at the deal that you're making
and helping you come up with negotiation terms,
right,
and play the shell game, right? Because you want to distract them with something over here to get what you really want over here that they sign off on because they don't realize, and going through all that strategy, right? And then I imagine
Absolutely.
In that negotiation, Chad, there's something to be said about stamina, right?
Absolutely.
You want to talk about stamina?
Yeah, tell us a little about stamina when it comes to negotiating.
Well, I'll tell you that the Google negotiation took 120 days, and they wouldn't get off this rock of 100 million. They kept saying they wouldn't pay over $100 million for it. And we literally had, and when we would walk into the room, it was an intimidation game. We would fly up there, sit in our room, walk in with our lawyer and 2 or 3 of us, and they would literally file in 18 lawyers and 7 executives. There's like 20 of them all staring at the 5 of us. And we had to actually never be so in love with your deal. I mean, there's a whole lot of things to talk about that you're not willing to walk away from, because if you aren't, they smell it, man. They taste it, they smell it, they sense it, and they'll use it against you. And I'm telling you, we went from $100 million to $1.3 billion over those several months. And there's a whole lot of things in the middle of there. That's not a small conversation. There's a whole lot of elements into that one. That's a chess game.
And to not go talk about it while you're in the middle of it and you have some backdoor info get to the other side that kills the deal. And right.
Oh, yeah.
Little nuances there are. But I think the stamina part is what most entrepreneurs miss, because they do see that dollar sign. They think, oh, finally some relief. And they just lose steam going into the final leg.
Oh, yeah, and especially because there's a lot of people that would look at that and say $100 million is more than I've ever seen in my lifetime. Why would I hold out for $1 billion? It's like,
right.
Anyway.
So, Chad, why don't you catch us up to then what happened next, and how does that bring us to the present?
Well, so look, leaving Google, I went through that whole crisis of who am I and what's life all about. And in the meantime, I have had people that, if you walk around my office, I have people in here that have been with me for 30 years in just about every business I've ever been in. And we have very little turnover because of the way we are really mindful and intentional about how we hire, who we hire, how we take care of our people, how we ensure that we're putting them in their best use, their unique ability. And with that said, when I left Google, there was about 30 people there that all came to me and said, "Hey, take us with you." And I was like, well, I don't know what the heck I'm doing next. And so I created an agency just to employ them initially, because the whole time I'm at Google, of course, I know people throughout all of my life up to that point that are coming to me, wanting me to do consulting, and I'm resisting it like the plague, because I don't want to get into this whole dollars for hours game. I'm all about, create once, sell it a million times, and keep collecting every month, right? But for a time, I'm like, all right, I'll take one for the team. I want to keep these people together. They're like family. And so we created an agency. Over time, what ended up happening is I got involved. So my buddy over at Massage Envy is blowing that thing up. And he goes from that to wanting to apply the same membership model to chiropractic, which became The Joint. I got involved with that. We were developing 2/3 of the state of California, developing like 100 chiropractic offices. They went public, and I sold my share of that. In the middle of all of that, I blew up my little agency, and we focused on customer acquisition for health, wellness, and beauty small box retailers, and work with them from basically cradle to grave. So we connect to their cash register, and we start on everything from generating that lead all the way to, years down the road. How do we get intentional referrals? How do we get them to consume more of our products, stay a month longer, refer their friends, all that kinds of stuff. And so, that kind of just moved from that to the next franchise, which become acupuncture. Now we're doing the same thing there. We're going to open 100 acupuncture clinics in the state of California. And that bled into, you've heard things like Orange Theory, Fitness, and Amazing Lash, and European Wax. Well, these are all basically third cousins of, Massage Envy. Basically, each time they had a big hit, an executive from that company started another one and said, how do I take this membership model and apply it to another service and just focus on that service, right? And so we do the marketing for all these little businesses. And so our little marketing agency has just continued to grow. Our focus is basically, helping small business owners achieve their dreams. And I have so much joy every day when I get out of bed in the morning, knowing that, and by the way, I work hard so that every member of this team here understands their entrepreneurial mindset, understands what that person on the other end is going through, the sacrifices they're making to start this small business, so that they understand when they're on the phone with them why maybe they're not anxious to take their call, or why they might be anxious when they don't think they're getting the results that they're getting, everything that they have on the line, right? And, we pray for our clients together. When we get together, we have our company meals, and we want to help them achieve their dreams. And we do that by acquiring customers and helping ensure those customers spend as much money with them as they can. And, that you were talking about this poster behind me, but this is kind of our guiding post. Everybody we hire, we make sure they're humble, hungry, and smart. And, for us, it's not just putting those words on there. We not only hire by it, but we fire by it. And if you're not willing, if there's anything that you say you stand for, you got some core principles, you're not willing to fire over them, then they're just words on a page. And, there's no integrity behind them, right? And we will hire and fire by that. Fortunately, we've only had to fire people a couple times, but I'll tell you, they knew it was coming, and later on thanked us for it. And our secret to success here is knowing that our three-legged stool is results, clarity, and scale. And the results are on, if I'm not acquiring a customer or getting them to spend more money, then we're not focused on it at all. So that's the results. And if we're going to do it, we have to have absolute clarity. So we will not work with anybody if we don't tie to their cash register. If I can't tie everything I do back to that customer and how much money they spent and over what period of time, if I don't have those triggers of knowing when I need to reach out to them again, without that clarity, we refuse to do it. We've had major brands come to us offering us a lot of money to work with them, but saying we're not going to give you the API to our customer base. That's too proprietary. There's too much, liability. We don't want you to know that. And we just say, that's fine. We're not working with you, because I can't, one of the biggest nightmares of being a marketer is every day having to defend that you're doing what you say you do. They're always saying, it's not what you're doing, it's what I'm doing. And I'm like, no, I'm never going to have that discussion with you. Everything we do is going to have a call tracking number. Everything we do is going to be tagged with that offer when they download it. We will absolutely know against your customer base the very first time they spend $1 with you, and that we touch them first, and there'll be absolutely no arguing about it. And then the last one is scale. Everything has to scale. We got clients come to us all the time, and they're like, we want to do this one thing, and we look at it and go, disproportionately, we want to make you happy, but there's no way we can scale this to 1,000 locations or 5,000 locations. And so we work really hard. And the beautiful thing is there are sometimes you get into a situation and you think there's no way you could scale that, but because those are the three legs and we want to do it so bad, you start to find, oh, wait a minute, what if we did this? What if we did that? And so one of the things, the privileges I get for doing customer acquisition for all these franchises, in addition to have equity positions in these companies and sitting on their boards, I see all the numbers. I see all the revenue flowing through. I see everything that we're doing to influence it. And then I look at that and go, okay, I'm making money, giving them a 10x return. Now I need to buy their business. And so I just start to get into those businesses. I own the very same businesses that our franchisees own. And you know what? That's our platform too. When I stand across the table from our clients, I say, look, I'm not just this agency trying to make money, spending your money. Like, I use all my stores as the petri dish, and until we prove it out, we don't spend any of your money. And I'm doing the exact same tactics in my business. My businesses are actually writing the same check, and I have partnerships in some of them. We don't get a discount. We write the same check, because if that check becomes painful to write for me, then what are they feeling like? I always want to feel like my client. And so we look at it a little bit differently.
That's fabulous.
I ran out of steam there, Perry. I don't know where.
No, I think getting back to the accountability of performance is really big for a lot of agencies. That I can't name names, but I got a client that was working with a branded co-promotion with a big public company, and the agency they had in there was so incompetent. I would have rather been working with a 14-year-old, and they couldn't track anything. All they could tell us was how many impressions and how many clicks and how much they spent. That's all.
Josh,
it was so worthless.
Unfortunately, I know some of the largest agencies in the country that are still that way, and it's, the greatest challenge is you look at the chief marketing officers in these companies that are hiring these agencies, and honestly, they, like, when I bring them our metrics and stuff, they resist it. They're like, well, yeah, but how many page views did it serve up? I'm like, what? I just told you how many customers we converted. Yeah, but I want to know the page views. What?
Right.
Because they've been programmed
impressions, like,
at it.
Why do I care about impressions on AdWords and Facebook like that? And when I did the math, when I did it backwards and figured out how much we were spending for those impressions, it was more expensive than if we were running ads in the New York Times.
Oh, right.
The CPM was
I've
higher.
displaced so many large agencies. I remember some of them, we get in there and their biggest thing is they're saying, oh, you need to just advertise on what's the online digital radio, the Pandora, and you need to do this geofencing and all this stuff. But there was so blurred on what the results were on some of these things. Yeah. I mean, they were trying to say that the money needed to go there before it went to PPC with high intent. I'm like, what? How did you get your job?
Right.
Yeah. Right. Anyway, I'm sorry.
I totally agree with what you're doing, and I think that requirement to have the cash register a connection is a very integrous requirement.
Well, there's a thread that ties all this together, which is pretty much your whole career. All the stories you've told here today, they were about creating a situation that was a win for everybody involved in a very definite and measurable way. So when it was these, internet service provider franchise guys, you wanted it to work for them and not just you, right? Then it was getting a radio network connected with Google, and they couldn't really see getting over the hump. Like what the radio stations didn't realize was that if they closed all of the feedback loops and tracking and everything with radio, then radio would become a super fine-tuned direct marketing machine, and everybody would make more money because they're not operating on fake statistics. But they weren't. First, they probably didn't realize that that would eventually happen, and secondly, they weren't willing to probably get drug underwater for a while until they came back up out, because that's usually how it works, right?
That's
Right.
very
And then,
insightful, and you're absolutely correct.
and then now you're talking about working with mostly lots of large chains of franchises where you're providing the technology that tracks all this kind of stuff, and you're eating your own dog food. It's like, well, I own franchises and I own units and I own stores, and I use this the same way you do, and I get the same price you make, and I'm the guinea pig before you are, right? And so there's a real ethic about this. And I was talking to one of my advanced mastery members today, and he is poised to take over an entire, like, I could see in the next 5 years him becoming the kingpin of an entire vertical niche of a certain kind of local business. And I said, well, let's not lose sight of the fact that the real goal here is to make the entire industry better. That, like, lots of local businesses are actually terrible. Okay. Like, if you've ever hired a remodeling contractor or tried to find somebody to come to your house and do something, like, it's like crazy, right? And he's in a situation where he can significantly improve the performance level. Like with Massage Envy, you've taken massages from this kind of dodgy, slightly red light district-ish thing to, I'm a member of Massage Envy. In fact, I got a massage 2 days ago, right? And like, I know exactly what's going to happen when I go there, and like, there's no, funny stuff going on, and they whack my credit card every month, right? And so you're raising the bar of how business gets done, right? And so so there's an ethic to how this is done. And so if you like the conversation that we've been having, reach out to Josh at joshualong.co, and you can have a conversation, see if advanced mastery might make sense for you. But if you have a business that's already running and it's already successful, and you think the thing could go supernova, or if you're a consultant and you have clients that you are pretty sure could go supernova, and you would like to catch a ride, get a piece of the action, and help them not have a stupidity spasm and blow the thing up before, and because sometimes they do, then reach out and we'll have a conversation. So, Chad, this has been great.
This has been fun.
Thank you.
Thank you. It's been my blessing. The only other thing that I want to say is that I'm grateful for you, Perry. On my way out of leaving Google, I was looking at maybe franchising an agency, and I was looking for who was the top person out there outside of Google that spoke about Google. And that's how I found you, and that's how I ended up in Maui. And you're required on my end when we hire somebody in any one of the departments, Facebook, PPC, anything to do with digital marketing. I have my old content from your bobsled and all the different stuff that you put out, and I require them to go through all that, because I'm a linear thinker and you're an alchemist linear thinker, and I love that it's not, your stuff isn't just how to pull the levers and push the buttons on AdWords. It starts all the way out to the avatar of the buyer and what's the conversation going in their head, and all the way down to the drip that could take place for years before they transact. And the way that you, even in my mind, opened up, and filled in some pieces, to me, it's a blessing to be here and to be able to pay it forward. And I learned a long time ago, I don't own anything. I'm just a steward for a time, and it's going to pass on to somebody else at another time. And so I love the opportunity. And look, one of the greatest stresses when you have some of these business successes is all of the people that are your friends that you never knew even existed, and all the banging on the door for business advice and loans and investments. And, you know, it gets to a place where you have to build these damn walls up, and you have to build, you know, all these moats around you, because you just can't take everything that comes in. And so the type of people that work with you are already of a certain cut from a certain cloth. And I am devoted for the rest of my life to give back and to work with those people. That's what gets me the most excited in this world. So the reason I approached you about wanting to be part of this is because you've got a certain quality people that have been vetted and are serious enough about this that they're willing to write a check. Because I can't tell you the number of people I've helped out by giving them money or not charge them for my information because I'm trying to do a good thing, but they did not value it. And so that vetting process that you have, and that these people are so committed to this growth, those are the kinds of people that I want to give back to. And so I appreciate the opportunity to shoulder up with you and to speak in these lives and see how we can help these business owners achieve their dreams. Anyway, I just wanted to thank you for that.
Well, thank you. I got a note here. Hey, Chad, Sharon from Connecticut. Awesomely inspirational, Chad. You were the answer people needed but didn't know existed. So got some love in the chat
Thanks,
box. And hey, thank everybody for listening. Josh at joshualong.co if you want to reach out. And Chad, this has been great, and can't wait to see what your next around the bend looks like. So hey,
Thanks, guys.
Thank you, Josh. Take care, everybody. Bye now.
Bye-bye.